Hey, Bulls and Bears. It is Saturday, August 21st, 2021. Thank you for joining me. I got quite a bit of news I wanted to catch up on here today. And one thing that really caught my eye was the statistic that U.S. citizens have record amounts or record levels in their 401k. So we're going to start with that, but we're going to tie that in with some broader economic details. We also have some news on credit cards and a lot more that I think you'll want to stay tuned for. So please make sure that you are subscribed. Let's get into the news. Now, this one comes to us from Yahoo Finance. More Americans have 1 million saved for retirement than ever before. Oh, wait a minute. Maybe I've been wrong the whole time. Maybe the economy's great. Or could it be that there's a few select people that are making a lot more money, but the rest of the population, about 70%, is not doing better. And in fact, most people are in more debt and doing worse. We're going to talk more about that here in a few minutes. But I wonder how many of these millionaires now are people that have $1 million saved for retirement. How many of them live in cities where the median home price is 600, 700, $800,000? And as we know, most people have to live in some sort of near or in some sort of larger city where the jobs are, where the well-paying jobs are. The people living out in the countryside, the people working on the farm, I guarantee you it's a tiny fraction of those people that have $1 million saved up for retirement. So yes, we can see that the $1 million savers, people that have that in savings, are probably living in very expensive areas. But I think it's also very uneven. I think there's a few people, a small percentage, I should say, of the population that's doing better than ever. But the rest of us, and I'm probably in the category of the rest of us, certainly don't have $1 million saved. I've done okay in investments this year, but honestly, after Uncle Sam comes in, I get pretty stressed, each year, especially having a family. And stress is not good. Worry is not good. And it can lead people to make pretty bad decisions. Actually, when you start feeling desperate, you start doing crazy things, right? Crazy trades. You start, betting too big or just doing stupid moves to try to, catch up, for lack of a better term. And I think that's one of the reasons why we see so many people here in America. I think half of the country is on some sort of medication, and a big percentage of that half is antidepressants. We know depression's been rising. Financial stress, and tensions are the number one cause of domestic disputes. And I believe I read that it's the number one reason for divorce as well. So when you see headlines like this, keep in mind it's a tiny fraction of the population, even though more Americans than ever before have $1 million saved for retirement. But that leads us into the next article here. And this is out of CNBC. From first glance, this looks like it may mean that people are doing pretty well. 401k balances hit a new all-time high, and that's per Fidelity. Now, most of us know we did see a big rise in the stock market after the huge sell-off at the beginning of the shutdown recession in 2020. And yes, if you're in stocks, you did see your returns gain back after the drop and then go on to new all-time highs. Again, many of you know this, right? But if people were just awash with cash, why is household debt, consumer debt at record highs? And even if you wanted to take money out of your 401k, unless you have some sort of exemption or special situation, you're going to end up paying a penalty to take it out. So good luck trying to pay off that record debt when you're penalized for taking your own money out of 401k. So unless you're retiring or unless you have some sort of exemption or special event, which you wouldn't get penalized, you're going to have, again, Uncle Sam coming in, swooping in, trying to get his cut. In the meantime, it's unlimited funds for the banks, for the lenders. But most people that go to take their money out, they're going to get penalized. And I wonder if a lot of these people with these record 401k balances are making enough gains to pay off the interest that's accumulating on the debt that they have. Isn't that interesting? So I'd like to see some numbers on that, but something tells me that the average debt might be rising faster than these average 401k balances. We'll have to keep an eye on it for you. Next up, Wall Street Journal article, Unemployment Benefits Forever. Treasury suggests how states can continue the incentives not to work. Folks, keep this in mind. I know a lot of you people are in this audience, and I see it in comments, are a pretty big fan of just the government paying for everything. And I can see your view. Your view is, okay, they're pumping trillions of dollars into the corporations, corporate welfare, repo, reverse repo, trillions of dollars. And that's just what they tell us. Imagine what's off the books, what they're doing that they're not telling us. But a lot of you say, they're putting trillions of dollars out there into the economy. Why not help the people? I understand. I understand where you're coming from. And actually, I wish all the money printing and the market propping and debt accumulation and handouts would stop, even to the banks. And then you would see plummeting prices. That would fix the problem. But keep in mind, the more people have a reason not to work, then the higher the prices are going to go for everyone else, right? So when you have labor shortages, supply chain disruptions, and a big part of that is the labor shortage, you're going to see rising prices. Now, there's lots of other issues happening. We have severe weather, droughts here, floods there. There's a new storm coming in, expected to do damage in the billions of dollars. And what's going to happen when all these homes get damaged? The insurance company is going to raise the cost of the insurance. It's just going to get worse and worse and worse. Inflation, inflation, inflation. But yes, I see a lot of people out there saying, yes, they need to just give people more money because they give corporations money, they give the banks money. But ask yourself, does that actually help in the long run? Or is the money that's handed out just giving people enough to get by maybe for a month or 2 months, right? We see it in the stimulus checks. Every time there's 2 or 3 months between stimulus checks, we start seeing consumer spending drop, right? So this just tells us that it's a temporary fix, a band-aid on a broken leg. It's not going to fix anything long term, especially when you look at the inflation and all the other just the mess that we're in right now. Next, another CNBC article, and we told you this was going to happen. I actually missed this one. It came out a couple weeks ago. Somebody posted this on one of the sites here. And credit card debt is rising again. Remember, it sank during the shutdowns, and a big reason for that is people weren't traveling, people weren't spending. A lot of places were closed. People were afraid to travel in many cases, afraid of the sickness. But now the credit card debt is rising again. Well, wait a minute. If we have more millionaires now than ever, if people have their 401k balances are higher than ever, why is credit card debt rising? Why can't people just pay it off in full each month? Well, that's right, because it's a small percentage of the population that's actually getting richer during these times. And do you think credit card debt is going to rise and then stop rising, or that people are going to start paying it down? With prices continually rising, no, it's just going to get worse and worse and worse. No one knows exactly when this is going to happen, but eventually we're in for one big collapse. It could be inflationary, it could be deflationary. Either way, it's not going to be pretty. And Bulls and Bears, I struggle every day to think about how to tell you to prepare, and I've told you what I'm doing because there's really no way to predict how long these markets can be manipulated. There's no way to predict what sort of event could bring the system to a halt. But we do know there's a lot of divisiveness right now. And I think we're going to see some sort of crisis unfold outside of the financial system that's going to start bringing this system to a halt. And I'll talk more about that in some other videos. I want to kind of put the puzzle together on that one and figure out how to tell it to you in a way that's going to satisfy all the masters here that I'm working under. So stay tuned. Thanks for being here, everybody. Hope you're doing well. Keep stacking and hope you're prepared. Hope you're more prepared than me. Myself living here in California, I have a lot of bad feelings. I'm kind of stuck here for a few different reasons. Family situation. But hopefully you are much better prepared for this than I am, and in a safe location. We see crime rising, unrest, and just wait until the freeze up hits, and you're going to see major chaos unfold, even probably crazier than we saw last year in the summer of 2020. Keep stacking, folks. Stay well. Thanks for watching this report. Bye for now. Peace.